from this because we are going to be discussing investments, how to build your investment portfolio from scratch. So send it to someone that you know is going to benefit from this. And then secondly, our hashtag is investments. I'll have an offer at some point in our discussion, but just to get you started, a couple of things that you should expect from the next couple of minutes. Number one, you should expect to have at least a draft framework for intelligent and productive investments. And then number two, you can also expect to identify how to transition from being just a spender to an investor, what that means. Our speaker will take us through that. And then thirdly, you get to know how to make your money grow with relative ease. And last but not least, you learn how to take responsibility for your investments. So, cutting to the chase, our guest today is an investment banking professional with 11 years experience working with BDO East Africa. He has done projects in business, strategic financial reviews, financial due diligence and valuations, mergers and acquisitions, private equity and debt transactions. He has done his work in the sectors of microfinance, telecommunications, constructions, healthcare, manufacturing, agribusiness, and consumer retail. He personally has investments in equities, bonds, bills, and unit trusts. Now, he's not just stating this. I've seen his investments. I won't tell you how much he has invested, but he doesn't just preach this stuff. He actually does it. And then he's a part-time lecturer in management accounting at the MAT Abacus. He's a member of the SCCA and CFA charter holder. He's the president. Recently became the president of SCCA Uganda Members Network panel, and is the board treasurer of CFA Society of East Africa. Ladies and gentlemen, our guest, our speaker today is none other than George Chateau Otim. Hi, George. How are you? You're welcome, man.
Thank you, Sudesh, for quite a profile breakdown. I'm overwhelmed with that profile as well. Thank you very much. It's nice to be here.
It's a great honor having you here, and I won't talk so much. I will let you get into it. So. First and foremost, we want to get to know you before we get into the investment stuff. Where was George born?
That's interesting. Interesting question. I was born in Dar es Salaam in a hospital called Mwananyamala.
Umeongea Kiswahili?
That's in Tanzania. Sorry?
Umeongea Kiswahili?
Yeah, kabisa. Naweza kumzungumza kidogo.
Okay, born in Dar es Salaam. How many siblings do you have, George?
So we are five. I have 3 sisters and a brother.
Okay, and what was interesting about your childhood, and what was crap about it?
What was interesting was I think returning to Uganda, which happened I think in the early 2000s. What was crap is when I lost my father, so that was a sad aspect of my life. Yeah.
That's so sad, man. But now transitioning into this investment stuff, when and how do you start being an investment enthusiast? What's the 1-minute version of that story of you being an investor?
It started quite earlier in my life. I think During the period when we had the financial crisis, it's 2008, 9, and 10 probably. So I was in my A level. I was doing my A level at that time. So my entire VAC was when I was following up the story and getting to understand how investment bankers operate. And it was quite interesting that they were able to make huge bonuses and then cause a lot of turmoil in the market and walk away scot free. So that was quite exciting for me.
Okay, so George, we'll get straight into the investment talk because the majority of the people on the call want to know how they can build their investment portfolio from scratch. But let's get back to basics. What is
Sure.
investment? How can you define it to a 10-year-old?
Um, I think how I look at it is the ability of someone being able to make some extra cash from the principal or the money that they inject in a particular venture. That's how I look at it.
Okay, and so in this case, when we talk about investments, is it just about money or it's more than money? What resources are we talking about here?
I would like to look at it from the perspective of it being more than money, in the sense that you would have, if you could just break it down, in order for you to make investments on a personal level, you'd have to have some savings, right? And how do you end up with some savings? It's a simple equation where you'd have your income being compared against your expenses. Okay. So there are two ways in order for you to increase your savings. One, you'd look at it from the income perspective. So as an individual, you would have to ensure that your income grows. And for you to do that, ideally, you'd have to invest in yourself, and that's the most important investment one would ever make in their life. So you'd have to either maybe go back to school, advance in the qualifications that you have, or probably you'd focus on getting a skill that is going to give you a competitive edge in the market, perhaps in the field that you're in. Get yourself involved in more public speaking forums like the way I'm doing at the moment. So once you do those things, it's not, you do not know when this is going to literally convert into cash, but ideally, when you get the visibility and also acquire the skill and people appreciate it, then that means you have something valuable you're offering to the marketplace. So ideally, you're able to negotiate better and your income goes up. So that's one perspective to look at it. Then the other is trying to cut down on your expenses or maintaining them. But the most important aspect would be to push your income and then either maintain or ensure that your expenses reduce so that you have more that is saved, right? So it's from these savings that you're able to now, because just having a savings sitting on a bank would mean that you're exposed to inflation, right? So inflation is it's a silent tax on your money. I keep telling people and giving them an example how I went to Chiswa Primary School, which is in Bugolobi, and I used to live in Mutungo. So back then, the transport I think was 100 shillings to move from Bugolobi and get to Mutungo. But right now, if it's about 1,500, and if you're lucky, it will cost you about 1,000. So imagine if in 2004 you had saved 100 shillings on your bank account, it would literally not be able to cover your costs. Yeah, your transport costs from Bugolobi to from Chiswa to Bugolobi. Yeah, so that's why you have to now look for investment opportunities that are eventually going to translate into additional income, and that additional income should be over and above what is deemed as the inflation, right? So
All right, George.
historically,
George, sorry to
that
interject. I think let's back up a little bit. Let's back up a little bit. You're
okay.
telling us about the saving and everything. Um, let's get into the area of let's say or options for me to invest in.
Sorry, I lost you a bit.
Let's say I have a little bit of my money. Okay, I've saved some money. What are the different options
Yeah.
for me to make investments in?
Um, so the most important rule of investing, ideally, is to safeguard your investment. I think that's pretty important. So safety first, and if you're looking at some of the options that you have, you'd have the treasury bills, bonds, which are considered to be the safest, and then by treasury bills or bonds, these are government securities whereby you're lending money to the government. So once you do that, it's presumed that the government can't default on its debt because of two reasons. One, it can tax you more. And then two, it could print the money. So eventually, they will be able to pay you back at a certain point in time. Then we have unit trusts, which are more of a product that is derived from the bonds and bills. So it's a collective investment scheme where investment or fund managers and invest in the bills and bonds. Yeah. The benefit of it is that it has a tax advantage, and I'm sure we've been hearing in the marketplace about the possibility of the taxman taxing them. So it's not something that has been concluded yet, but we'll see. And then the other aspect is liquidity. Liquidity in the sense that you have access to that money in the event, let's say, of an emergency, or you have an pertinent expenditure you need to incur. So you would be able to access the money. Another alternative would be looking at your equities. So by equities, you're buying a piece of a business through shares, and you can look at it in terms of just the Ugandan market. You have also the regional aspect of it in terms of East Africa, and then the international market. Then you have real estate, which you're quite familiar with, and then also maybe opening up a business.
All right. I think most people would be familiar. Most people would be familiar with real estate and starting a business. What's your advice on someone who says, "Man, all that stuff, treasury bills, bonds, unit trusts, sijui, equities. Why don't I just go with real estate or starting a business?" What what is the balance between going for these investment options, real estate, and starting a business?
I think if you look at the historical aspect of the returns of real estate, they've been quite low. And just looking at the time it would take you to recover your investment in a real estate project, assuming, let's say, you set up rentals, if you're lucky, you'd be able to recover your investment in a period of 10 years. But in most cases, you find that it takes you on average maybe 15 to 20 years to recover your investment. So, real estate, ideally, rentals would be able to maybe protect you and ensure that you have a steady flow of income, cash flow coming in. But you could enter into it in the sense of maybe flipping land, buy, wait for it to appreciate in value and then sell later. Or you could consider farmland or agroforestry. Then, from opening a business, what tends to happen is people tend to open businesses based on what other people are generating in terms of returns, etc. For instance, if you told me you're running Sudesh International, and I say, oh, well, Sudesh is doing so well, so I need to also start up my coaching business. I may not be so well placed to succeed as you are, so eventually I end up burning my feet and then losing money in that sense. So I'd advise that if at all you're going to open a business, let it be linked to your core competencies. Now, like me, who is a finance professional, I would perhaps consider opening up my own firm that does maybe accounting, finance, and investment advisory. I would succeed because it's where my core competence lies. So those are things that people need to be put into perspective. In terms of these other securities, the benefit you get from them, one, and speaking from experience, is that the amount of effort that you need to put in is quite minimal. So all you have to do is just buy a bond and then wait to receive your returns as you path developing your skills in maybe in your profession or something along those lines. So it gives you the ability to earn, and then there's that aspect of compounding returns. So compounding makes reference to the fact that if you, let's say, invested in a unit trust right now, you'll be able to earn a daily return interest. So the interest you earn today becomes part of your principal the next day, and then they compute the interest you'd earn for the next day. So literally, this is being done with very minimal effort, so you can focus your energy in trying to develop as an individual. That's how I put it.
Okay, thanks for shedding light on that. My next question is, in Uganda, in Uganda where we are today, where does someone find these treasury bills, bonds, unit trusts, equities, stocks? By the way, where do stocks lie? Are they?
Yeah, they're equities.
They are equities. Okay. So
Yeah.
where can I find these options?
Okay, so for the treasury bills and bonds, ideally you'd have to go to the banks because they're the primary dealers. So you could consult your bankers, and they'll advise you on how to go about it. It involves opening up a securities central depository account and SCD account, and then you'll be able to participate in the bills and bonds market. Yeah. For the unit trusts, we have a number of licensed firms that offer the product. We have UAP, Old Mutual, ICA. We have Britam, Sanlam as well. Then I think all the other fund managers are also considering setting up that product as well in the market. So that's where you can get them. In terms of having access to equities, I'll start off with the domestic, meaning here in Uganda. You could approach some of the licensed brokers as well. These can also be got from the CMA website, but the notable ones are UAP, All Mutual, Crested Capital, Diane Blair. So those would, and they'll be able to advise you on which equities you could probably get exposure to. So the regional shares or stocks could be accessed also through the licensed brokers here who have regional presence across the East African market. So I think you have Dan Blair in that aspect, and then also UAP Old Mutual and a couple of others. That's why internationally, how I get the exposure to the international shares. For instance, I could proudly say I'm a shareholder in Apple. I do not own an Apple phone, surprisingly, but I do appreciate the product. I know they're quite expensive, but I'd rather spend that money buying shares in the company. I use international interactive brokers. Sorry, so that's how I hold a Xiaomi phone for starters. So which is Chinese. So that's how you can have access to some of these traditional asset classes.
All right. Thanks, George. Before we go to the next part, we want to thank our partners, BDO East Africa. If you have any tax issues, if you have any audit and compliance issues, if you're looking for business advisory services, BDO East Africa is the firm for you. You can contact George, and he will be able to sort you out with any of those services. We want to thank them so much um, for allowing you to be here. Also, I want to interest you in something called the Blueprint. And this is a 12-week executive coaching program for forward-thinking leaders who desire a 10x return on career or business in 12 months, fulfillment and happiness, a framework for making the right decisions in life. Unlike other coaching programs, Blueprint addresses relationships, physical well-being, as well as intellectual and spiritual aspects. So personally, I am there to coach you. Our people have gotten amazing results. I speak it because I put my name on it. It works, and it has 100% money guarantee. Once you sign up for the first session and you don't like it, you don't come back. And guess what? The first session is free, and we're giving you a 50% discount if you do this one thing. If you go right now on at Consult Sudesh and sign up for your free session, we give you a 50% discount. So please make sure you do that, and then I'll see you as I'll be coaching you, because Blueprint is the only executive coaching program, and BDO is the only tax, audit, and business advisory firm. Okay, getting back to our discussion, George. Let me say, I've looked at, I've had a chance, I've had a chance to look at your investment portfolio, and I want to tell the listeners how much it is, but it is quite a lot of money. Yeah, and. I won't go there, but I know you started somewhere. Let's say
Yeah.
my name is John, and I have 100,000 Ugandan shillings. Where would you advise me to start from, and within a year's time, what return on investment can I have on such an amount of money?
Yeah. I ideally direct you towards the unit trust, and the reason why I'll do that for starters is that it helps you build your cash over time, right? So the earlier you start, the better. The one thing about investing is that the sooner you start, the better. Time is your friend. However much you look at it from the perspective of aging, but if you start quite early in your career, it will be quite helpful. So you'd invest in that. In terms of the return, it's not a lot, but like I said, investing for the future, you have to ensure that you safeguard your capital. Look at it this way. Let's say if for instance you have that 100,000 and you're maybe a 20-year-old. I started working when I was 2021. And right now I'm 31. So if I had gotten that 100,000, put it in a unit trust, by the end of the first year, you probably have it generate about 10 to 12,000. But if I'd left it in there after every 7 years, that money would double. Yeah. So meaning it would right now perhaps I would be at 200 and something. So that money has grown with many more effort from my end, and I'll probably use my time to develop, and which I did ideally. I studied SCCA, then studied CFA, and now chasing quite a number of other things. Yeah. So safety first, and then the return is just a bonus. So long as the money that you have invested is able to cover your inflation. That's how I would say it.
And on the other side, after around a year, how much return on investment? If I put that money in a unit trust, which is really a cocktail of these others, how much how much return on investment am I looking at?
You're looking at about 11, 12%. That's where the market is at the moment. So if it's 100,000, you would have earned 12,000.
Okay. And
Yeah.
I think for emphasis, which of these options can I get my money out quickly? Which ones are long term? Okay, which ones are short term? Which ones are mid term? And which ones are long term?
So if you're investing in the treasury bills, bills are those that mature in a period that is less than a year. So you have perhaps 3 months and 6 months. While with bonds, they're the ones that mature. By maturity, I mean you'll be able to get back your money. So bonds are those that mature after a year, 3 years, 5 years, etc., depending on the period you're invested for. Unit trust now give you they have a blend depending on which product you're invested in. So with unit trust, you can take your money out at any single point in time. I think the industry benchmark is that you get it within 2 working days from the time you submit your request. So it's the most liquid and helps you get your money back quicker.
Okay. And I'm going to put you on a spot here. I know Uganda
Yeah.
has a what do they call it? A securities. What do you call that? Like
Securities exchange.
yeah, securities exchange. Which companies would you advise me to buy stocks in as of today?
So as of today, I would recommend companies like Umeme. One, they have a really high dividend yield. The most recent dividend has been paid, I think, like 3 weeks, 3 or 2 weeks ago. But nonetheless, if the company is not supposed. So the company's concession is expiring in March 2025. So ideally, whatever money they make would literally be going into distribution to the shareholders because they can't invest in the long term, knowing that the concession is going to expire. So there won't be any continuity beyond 2025. So ideally, the focus of the management team there should be that whatever money or profits and cash that they generate from the operations of the business should be distributed to the shareholders. So ideally, the dividend is going to go up, and then if you look at the price that the government will potentially pay out, that's if at all it does, because there's a risk element in there. It's way above the current price it's trading at. So that's what makes it attractive. You have others like like MTN, which is also a company. If you look at the prospect of the business, it's a telco. Ideally, you should expect them to be in business for the next 10 years because you need to have a long-term perspective to investing. So it's a company that's also on a growth trajectory as the population keeps it growing. Then you'd expect more users, and it's quite innovative. They keep on coming up with quite exciting products. So those are the top two I would recommend for now, but there are others as well.
Okay, and you hinted on what I was going to ask next, but maybe you can elaborate on it. The what I know there are experts like you, George, but I was reading about Warren Buffett, and he was saying, "Do not invest in something that you do not understand." So, if I want to invest, what if I let's say for the companies, the Umemes, the MTN, what are those 3 or 4 things that I'm looking at and judging that, okay, this is a great investment, this is not a great investment? What indicators are there for great investments?
One, you'd have to, I think, just ask yourself some really basic questions. I know, fine, that you'd want to see, have those three elements, but I could ask you, do you think Apple is a good company? If I pose that question to you.
I think it's a great company.
So why? Why do you think it's great?
Uh, for the reasons
Sorry,
that
now I'm
you've
becoming the
mentioned.
interviewer.
You're taking over my role. But I first
Exactly.
first of all, personally, I'm biased because I'm an Apple enthusiast. But I like the fact that they are always expanding their portfolio. They are going into different industries, and then you can when you look at the valuation of the company and who they are bringing in and the CEO, all those would make me invest in Apple.
Thank you. So it's ideally looking at those are the silent things that people, we investment bankers tend to make quite complicated. But even you within your space, you would probably say that maybe there's that coaching group or learning group. Is it LRMG, something like that, based in South
Yeah.
Africa? Yeah, yeah. So you know the industry quite well, so you'd be able to assess whether this is a really good company without even looking at the financials. One, because for instance, you're saying the product is it's a good product. You're seeing people buy it. You're seeing those who buy them. Because I have friends who have switched from Android to Apple, and they've never turn back. So ideally, they just keep on buying an improved version of the same products from the same company, and then end up also buying more. So they end up getting MacBooks. I see them buying the watches, etc. and stuff. So those are the features that will convince me that it's an innovative company, and then also it's going to grow, right, without even looking at the financials. So when it comes to the financials, like I say, just from the perspective of an individual, your revenues have to exceed your expenses, your costs, and then two is that as an individual as well, you need to avoid debt as much as possible, because you'd have to, one, it's an obligation that you have to meet irrespective of what happens, and yet generally life is uncertain. Then two is you're paying an interest, so that money that you've borrowed, you have to find ways of paying the extra money as interest, as the cost of borrowing that money. So it makes it quite difficult for companies that have really huge amounts of debt, and also as an individual, if you're always in cycles of debt, then it makes it difficult for you to grow as well.
Okay. So I think I have about 2 questions, and then those of you that have questions, please send them through. The handle is at Consult Sudesh. Please send through your questions because I want to open up the discussion in a couple of minutes. My last two questions would be one. You hinted on it, but can you maybe elaborate a little bit more? How do I get to invest in international companies like Apple, Google, that are not that do not they we know we buy their products, but they are not really here in Uganda, but we know they are good. Can you say you said something about it, but can you repeat it? I think there's someone that is interested in this.
Okay. So there is a company called Interactive Brokers. So just like we have brokers here for the Ugandan market, the few that I mentioned, Crested Capital, UAP. There is a listed company. That's also something that gave me a level of comfort that my money is safe with them. They're listed in the US, and they're able to help international investors acquire, to make enable to they're able to make international investors invest in the US as well. So you sign up online with them. You go to their website, then submit in your KYC, know your client information. Then they set you up. So once they set you up, the next thing would be for you to fund your account. So you would have to send money. I normally use Stanbic since they're my bankers, to send money through the bank to their account in the US with JP Morgan. So once they receive the money, they reflect it on your account with them, and then from there you're able to make investments as you please.
Okay, all right. Now, just to give our listeners a perspective, as of today, how much is the Apple stock going for a share?
It's been ranging between $176 to about 190 something. So I didn't check today though, but it's something you
And
can get off.
how much is that in
Yeah,
Ugandan shillings?
like about maybe 500 to 700,000, I guess,
500,
give or take.
500. Okay. And how much is the Umeme share today, as of today?
The Umeme share, the last time I checked, should be around 440 shillings per share, Uganda shillings.
Okay. All right. I'm just putting it out there for people to know, those who have the money to invest immediately, to think about a couple of things. And then before I open it up to discussions and questions, I know investment is wide, but for someone that wants to get into this industry and use your services later, what books would you recommend that person to start reading?
Okay, I would recommend that they read. Uh, I would recommend One Up Wall Street. It's by Peter Lynch. Is probably the most successful. I know people mention Warren Buffett as the most successful investor, but it's because he has done it over quite a long period of time. However, Peter Lynch had a better record. He did about 33% per annum for a period of 15 years. So he retired after that period, but his his um, his books are really quite rich. Then there is Snowball, that is Warren Buffett's autobiography. And then there's a funny one about investing called Eat the Rich by uh, PJ O'Rourke.
PJ.
O'Rourke.
Okay. All right. I'll look
It's a
forward.
very
I mean,
funny book. You should read it. Yeah.
I'm reading Snowball, but I didn't know about these other two. I'll look them up because really you cannot invest in something that you do not understand. So I'm going to open it up to the Q&A. The questions that are coming in. Please feel free to send in your questions. The handle is at Sudesh, at Consult Sudesh. Sorry. And as you do that, before we go into our Q&A, we want to partners BDO, who are the ultimate tax audit and business advisory firm. They'll fix everything that George is talking about. Those are your guys. And I also want to invite you to look up for the Blueprint Executive Coaching Program, a 12-week coaching program that not only covers financial, but it goes into your well-being. It goes into helping you come up with ideas. And personally, I put my name on it. I get to coach you, and it has 100% money back guarantee. Like if you start and you don't like it, we give you back all your money. It works, ladies and gentlemen. How do I know? We've coached over 250 executives, and they've had amazing results. They've been able to have 10x results. They are more fulfilled and happy, and they are killing it in the market. They are kicking us. So that is the thing for you to do. So sign up right now. You can go to at Consult Sudesh on our Twitter handle. There's a link there. Get a free session, and if you don't like that session, you get out. But I guarantee you, once you come in, you'll love it because it has worked for so many. Okay, so let me see. There are questions here. The first question is how much does someone need to invest in bonds for starters?
Okay. Can I answer that, or are you going to read them at
Please
once?
answer one by one, and then we'll continue.
Okay. Yeah. So for bonds, the minimum amount is also 100,000 as well. But for it to be, if you want to participate in the auction, where you try to negotiate whatever rate should be paid to you as an investor, then the competitive amount would be 10 million Ugandan shillings. So what tends to happen is that if you start off with 100,000, uh, whatever return that is determined at the end of the auction is what you receive. While with the 10 million, you can suggest what your return could be, and then once the auction is done, if you're lucky, you'd be able to get that return, or otherwise, you'd get whatever everyone else is getting. But it just gives you that benefit to participate in determining what your return should be on investment.
All right, thank you so much. There's another question here, and it says, George, thank you so much. You're quite knowledgeable. My question is, the SCD account that you talked about, is it different from my normal bank account, and which banks offer it?
Yeah, so it is different from your normal bank account. So the primary dealers in the market, I think you'd have Stanbic. I use Stanbic, but I think all these other banks also participate. But the notable ones that are quite familiar offer that service: so Stanbic, Stanchart, ABSA, and then maybe Centenary. More or less the top four banks in terms of the balance sheet size would be appropriate. Yeah. But I reckon
Okay,
also the others must be offering the same service.
okay. And how much does it cost to open this account, by the way? That's my other
No,
question.
it's free actually. It's free.
Okay. And then this other question is, uh, I earn 480,000 and I spend most of it throughout the month. How would you advise me to start focusing on saving?
Okay. For starters, I think what would be the immediate fix is to try and minimize the expenditure. If you could, from that 400 and 80,000, if you're able to maybe reduce your expenditure in the month to maybe 380, and then you have 100,000 saved, you could use that as um an avenue for you to have your first investment, maybe in a bond or in a unit trust. Yep. So by the end of that, the next month at least you'd have earned yourself 100 shillings. However much it's little, but it's remember it's pennies that build pounds, so it still keeps on growing, right? And you don't touch that money. But however, that's not a sustainable solution. What I would recommend is for you to either consider, having other avenues in which you can earn money, or consider maybe getting another better paying job, and then through that better paying job, you're able to save more and invest more, and also invest in yourself, in the sense of developing various skills that you feel are relevant in the field that you're in. That's how I see yourself getting out of that conundrum and being able to grow, as an individual. Because the 400,000 may not be sustainable for you in the long run. So you need to grow your income as well.
Okay. All right. Thank you. And then this one is saying, I committed to a savings fund for my two children from an insurance company. Is that an investment or just savings?
So insurance is a product that so many people don't tend to understand, quite well. Insurance, literally, and that's also something I've always disagreed with. People who try selling that product to me. It shouldn't be sold as 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 an investment. Literally, you insure simply because you want to protect yourself against a certain risk, right? So if you let's say you set up an insurance policy for your, let's say, the education of your kids. Literally, what you're doing there is you're saving money with them, and sometimes even the return that you make of the money you save with them is probably even less than the inflation rate. I've seen it happen to quite a couple of friends of mine, less than the inflation rate. So literally, you're losing money. The fact that inflation is eating into your savings. So how you should view insurance, and if there's anyone who's trying to sell an insurance policy from you, just ask them, what risk am I protecting myself from? So, for instance, if you're earning maybe 1 million Ugandan shillings, and you're setting up a policy for your children, maybe it's an EduServe policy. What you're trying to do is to protect yourself, in the sense that if anything happened to you, whatever savings you've had, and then also your earning is limited, then the insurance company should be able to cater for the school fees of your kids. So that's how it should be viewed. Insurance should never be viewed as an investment vehicle. It should be protection against risk. If it's medical, you're protecting yourself from the fact that if you fall sick, you're able to access medical services, right? If it's general insurance, looking at it from the perspective, let's say insuring against you, let's say insuring your car, you're saying in the event of an accident, I should be able to at least recoup a portion of the investment I've made in this particular car. So that's how insurance should be viewed, not as an investment vehicle.
Okay, thanks for the clarity on that, because I think I was also struggling with that. And then please keep your questions coming in. We have the expert in the house. This one says, and thanks for asking this question. This one says, I invested in a plot of land. I invested 2 million in a plot of land in 2020. and recently I sold it for 2.5 million. Would you consider that a great return
Okay, he invested 2 million, got 2.5.
in 2023?
That's over how many years? 3 years or 2 years?
Really? That is around 3 years, I think. Yeah, three.
3 years. So I don't think, because that's let's say that's 500,000, give or take. So you're getting a return per annum of about 9%. So ideally, I don't think you've made the substantial return,
Okay.
because
So did they make money?
yeah, they made money, but there are other avenues that more liquid avenues that were probably generated him a higher return, right? So for instance, if you're looking at the unit trust, which is do maybe 11, 12%, um, ideally you'd be making maybe an additional 200,000 on top of the 500,000 that you had invested in the land, if you had done a unit trust.
Okay. Now I think I know where this. I know. I think I try to get the mind of this person. Now let me ask. This one is from me. The question is, can I lose? Because we've been told a lot that once you invest in real estate, you're sure you're going to make a return, and on investment it's always positive. Under what circumstances does someone lose money on an investment in real estate, especially land?
Um, so the two ways. One is you could have bought space like air. So you've seen where there is a land, there is a transaction involving land, but then the person who has told you that land is probably not the owner of the land when you go and do a search, maybe a ministry of lands, if you've not done your due diligence well, right? So that's how you would lose it in the first instance. Then the other would be maybe if there's been uh, an unreasonable hype in the prices of the land in that area. So, for instance, let's say, as you know, is that during COVID there was a lot of construction happening, so there's a lot of money, being invested in real estate during that period. So prices of property could have gone up during that time. Maybe 5, 6 years down the road, as the economy is not doing well, the roads are bad, as you notice, then probably the value of the land will probably go down. So you'd probably lose money. But in general, land appreciates. So if you invest in land, it's more or less there's a level of certainty that it's going to increase in value, because overall there's high demand for housing in our nation. There's a shortage of supply of housing in our nation, and yet the population keeps on growing rapidly. So the demand
Oh,
exceeds the supply. Yeah.
okay. Thanks for that clarity. And we're coming to the end of our Twitter space. Let me see if I have any other questions. No, these are just they are thanking you for. No, there is another question here. How will switching investments impact my overall financial goals and risk profile? Let's say I'm switching from bonds to stocks or to real estate.
Bonds to stop. So how it impacts? You need to look at from the perspective of you losing the potential of you losing that money. So meaning that the risk has gone up. And situations vary, but the overall trend is that when you grow older, you're having more responsibilities. Perhaps you have a family to take care of, you have a girlfriend to take care of. So your expenditure is most likely going up. So, do you eventually, you know, leave what would be termed as maybe a low return investment where your securities, I mean, where your principal is guaranteed, and go for one where you're exposed to potential losses, and yet your needs have gone up. So it depends on the risk appetite of an individual. You can't really put like, let's say, stamp something on it and say this is the general rule, or this is what you should do. Depends on the individual. But me, as George, I'm a risk averse person, so I try to ensure that whatever investment I am taking, I am certain that my principal is protected. When I finished school, when I was 21, I had a different perspective. I literally invested in almost all the companies listed in the stock exchange here and lost money. And I think I'm still recovering from that aspect. But right now, I just hold about two or three companies. Of course, the two that I mentioned, and maybe Bank of Baroda. I sold my shares at losses for the other companies because I was just too excited with the knowledge I'd accumulated from school. But right now, my risk appetite is quite low, and I think from experience, I've learned that saving yourself from losses is the most important investment goal than anything, than chasing the return. I was also involved in Ponzi schemes. There was one called 99 Traders. I knew it was a Ponzi scheme. A Ponzi scheme is where you have so there is no underlying business. So what's happening is that the first joiners have their money distributed to the new joiners. It is until eventually you don't have any joiners, and then it collapses. So I thought I had timed it, and then invested thinking I've invested early, so I'd be able to get my money back and a return on it. But guess what? It collapsed after a week of investing, so I lost almost everything. So ideally, it should be, from my perspective, is just ensure that whatever money you're investing is safe, because it has taken you time also to accumulate it, so you wouldn't want to lose it in one go.
Yeah, actually, Warren Buffett says that the first rule of investing is never lose money, and the second rule is that look at rule number one.
Correct. Yes.
Yeah,
Exactly.
you just never lose money. Now, I
Never lose
just before we go, just you hinted something about multi-level marketing, and there are lots of those around town where they you're rewarded based on who you recruit and selling a certain product. What do you have to say about that in terms of investment? uh George, do we still have you? Hello, George, are you still there? Okay, I don't seem to be hearing from George, but he will be answering the question later, about the multi-level marketing. George, are you still there? George, okay, we have a technical issue, but before we wind up, I want to thank everyone that has been part of the call as we've been discussing how to get your investment portfolio. We've discussed so many things. We started by defining what investments is. We looked at the different types of investments, the treasury bills, the bonds, the unit trust, the equities, real estate, business. And then we looked at, do you invest in real estate? What's the return on that? How do you lose money? How do you gain money? If you have 100,000, how do you invest in that? And then people ask different questions. And then if you have any other questions, also we had a recommendation for the three books that we had a recommendation for the three books that George recommended. Yeah, and those books are Wall Street by Peter Lynch, Snowball by Warren Buffett, and then Eat the Rich by PJ something. I did not get the name there. So that is something that you can look at, and also we looked at investment being. I mean, insurance. Insurance is not really just protects you. It's not. You should not look at it as an investment. So, with that said, ladies and gentlemen, thank you so much for being on the call. Have a lovely evening, and remember to sign up for the Blueprint Executive Coaching Program. The first session is free, and it has a money back guarantee. With that said, ladies and gentlemen, adios, muchachos. Bye bye.